Okay, now see here, direct tax का subject, broadly it is divided into two parts. Certain topics are related to income tax procedures. Procedures means how do we file a return of income, and how income tax wala they do the inquiry, and how they do the assessment. So certain topics are related to the procedures, and some topics are related to computation. Computation means 5 heads of income: salary, capital gains, income from business, etc. Although in in CA final they usually don't ask salary, etc. Their main focus is on income from business and capital gains. But whatever, those are called computation topics. But computation topics we'll be doing later. First I am planning to start with procedural topics. So first we'll be starting with procedural topics of income tax. Okay. So in procedural topics, first we have got assessment procedures, and this topic is most important. Usually people find it tough, but trust me, you will find it so simple. Just understand everything with logic, and I'll be explaining everything with reason. And if you understand everything with reason, then only you will get confidence and you will start liking the subject. But the moment you start simply by hearting without understanding the logic and the reason behind that time frustration will start. So the key to understanding any subject is understand with reason and with logic. Okay, so see here, assessment procedure. This topic is broadly divided into 4 parts. Means this is a summary of the topic. Means I will be discussing this topic in 4 parts. Part 1 will be returns. Second part will be inquiry. Means how income tax department does inquiry. That is part 2. And then part 3 will be assessment. This is most important. Assessment. And after that, other sections. Other section means what you know. This entire topic is actually in the range of section 139 1 to section 156. This is a range of sections which we are going to discuss. Now, in this, whatever sections are remaining at the end, I have called them as other sections. All the major sections will be done in first 3 parts: returns, inquiry and assessment, and then all these sundry sections I have put it in other sections. So other sections mean why sections? Because we are going section wise only. But only thing is I have given you the summary in my own way. But actually the law is framed in terms of sections only, na? So in terms of section, if you say our journey is from section 139.1 to section 156 in this topic, okay? But in terms of my pattern, it is 4 parts: returns, inquiry, assessment, other section. Okay, so see here, part 1 is returns. Part 1 we are starting. Okay, now in returns, first section is section 139.1. Look at the screen. First section is section 139.1. This is called voluntary return. Now why it is called voluntary return, I will come to that after some time. But right now understand this section is on voluntary return. Now this section explains us 3 things: who should file return, when to file return, and how to file return. So what are the 3 things you have to study? Who should file, when to file, and how to file. But you know, many students have one more question: why to file? Why to file means it is necessary to file because by way of filing the return, we show our computation of income to income tax department, and that computation income tax department wants to check, because whatever income we earn, on that we pay tax on our own. But whether we have paid the tax properly or not, whether we have hidden some income or not, all that government wants to check. But how will government check? For that you have to first file your return, na? This is the answer to what question? Why to file return? Because if you don't file return, how will income tax department check whether you are paying the tax properly or not? So it is necessary for everyone to file the return, because law has kept full trust on people. Okay, whatever you are earning, honestly pay the tax. But God knows who pays honestly and who doesn't pay. So that's why law wants that everyone who has paid the tax, you simply make your calculation in the form called return and submit us, so that we can check whether you have shown the computation, whether you have done the computation properly or not, and whether you have paid the tax properly or not, you want to check. And since we want to check, you need to file the return. But all these things, it's not written in the act. This is I have to discuss because students will have a question why to file return. But mainly this section, okay, so why to file return, that I explained you informally. But the section 139(1), it talks about only three things: who should file return, when to file, and how to file. So just focus. First I will be discussing who should file. To see who should file may, look at this. There is a chart over here. Look at this. Companies, partnership firm, RAUSO. What is RAUSO? I'll tell you, it is a short form. And FACO. These four people, for them it is compulsory to file the return, irrespective of the size of the income. Whether they have very huge income, less income, no income, loss, irrespective of the size of the income, these four people have to compulsorily file the return. But now we'll have to understand why it is compulsory for these people to file the return, whether they have income or no income, why it is compulsory. So that reason you need to know. I told you everything you should understand with reason. So reason I will tell you. But other than these four people, look at this. Others means other than companies, partnership firm, RAUSO and FACO. Other than these four people, other people have to file the return only if they have big income. Now what is big income? I will talk about that later. Right now just casually remember, only if they have big income, they are supposed to file the return. What is big? We'll discuss after some time. First let me finish the reason for why these four people have to compulsorily file the return. Okay, then I will come to other people. But broadly you just keep in mind, four people, they have to mandatorily file the return irrespective of the size of the income. And for other people, it is not compulsory. Only if their income is big, they are supposed to file the return. Now what is big? We'll discuss after some time. Now see, think why companies, partnership firm and RAUSO and FACO are supposed to compulsorily file the return. See, about RAUSO and FACO you cannot think because you don't know the full form. But try for companies and firms. Why every company and partnership firms are mandatorily required to file a return irrespective of the size of the income. So see, reason is what you know. Companies and partnership firms are big entities. They have got huge potential to earn the income. You know, they have got such potential that they can earn the income in crores. So since they have the potentials of earning the income in crores, law feels they are big people, and law feels it is necessary to keep in touch with big people. Even if they don't have the income, it is necessary to keep in touch with big entities. And companies and partnership firms are big entities. And keep in touch means what? If companies and partnership firm regularly file the return, there is a constant contact between them and income tax department. And income tax department feels that we don't want to lose contacts with companies and partnership firms. Although in one particular year they might have suffered loss. On loss you don't have to pay tax, but that is one particular year, na? You never know. Company and partnership firm can suddenly start earning income in crores. So that's why what law feels, we don't want to lose touch with companies and partnership firm. And just to keep in touch with them, it is necessary to file the return. Okay. So that's why companies and partnership from what law expects, see whether you have income or not, we are mainly interested in maintaining a continuous touch with you. And that continuous touch will be maintained only if you regularly file the return. It's okay if you don't have the income, don't pay the tax, but at least file the return. Filing the return is not a big task, na? You have to simply fill up the form. You say your income is zero. It's okay, show zero income, but at least file the return on regular basis so that we are in constant touch. So this is the logic of making Companies and partnership firm compulsory to file the return. Okay. Then who is the next one? Rauso. Now see, what is the full form of Rauso, you know? Look at this. Rauso means resident person having asset located outside India or having signing authority in an account outside India. What was it? Tell me without looking. Resident person having asset located outside India or having signing authority in an account outside India. Means every person who has got asset in foreign country, it is compulsory to file the return. Even if he says, Baba, my income is zero, I don't have any income, why should I file the return? When I don't have to pay the tax, why should I file the return? So they might think like this. But what law says? We are not interested in whether you are having income or not. You say you don't have income, don't pay tax, but file the return. You see, paying tax is different and filing return is different. In case you don't have income, you don't pay the tax, na? But at least you are supposed to file the return. Now, why government is behind these people? Can any person who has asset in foreign country file the return? Why compulsory for them? Because you know, having asset in foreign country, that means there are high chances that a person might be holding black money. How? Think. What did I say right now? Person having asset in foreign country, there are high chances that he might be holding black money. Now firstly, what is black money? If you are earning the income, you don't pay the tax on that, so such income is called black money. Black money is nothing but what? The color is not black. Color is normal. It is just on that income, you are not paid the tax. So that's why such income is called black money. So why did I say a person having asset in foreign country, there are high chances that he might be having black money? Because you know, the people who don't pay the tax, the people who hold the black money, usually they hold them in cash. Because we will not keep it in bank account, na? Because if I keep such income on which I have not paid the tax in a bank account, then it will be open up. Means people will come to know that I am having income, and basically I want to hide. I don't want to show, especially the income tax department, that I have earned. So since I don't want to show, since I don't want to disclose, obviously I would prefer to keep such income in cash. And where do you keep that cash? Usually you keep that cash income at your home. But at home also, how much you will hold? Beyond particular extent, you know, it is very difficult to manage such income in cash at your home. Why it is difficult to manage? You are scared. Suddenly income tax department conducts a raid, then you will be gone. People are scared of the raid also, na? See, initially if I am having, say for example, 5-6 lakhs income, and 5-6 lakhs income, I can keep it in cash at my home, I can keep it in my cupboard, I can hide it somewhere because the income is less, na? But what if I have an income of 100 crores? So 100 crores, how will I keep at home? I can keep also, I can buy a flat also for that, to hide the income. But then there is a risk. Suddenly income tax people come at my home for raid, I'll be gone. So you know such people what they do? What they do? They locate all such black money in a foreign country. They feel it is better to not keep cash at my home. And at the same time, they cannot keep it at some friend's place also. Friend will eat away the money. So they don't prefer keeping at some unknown people, some friends, stranger ke saath. They don't want to keep the money. They want to keep the money in their custody only. But at the same time, keeping at home is risky. So what they prefer? Simply locate all black money in a foreign country. And you know, there are many foreign countries where the government is so lenient. They are not bothered. Even if you open a bank account, and even if you deposit 100 crores cash in such bank account, they will not even ask, who are you? There is no KYC requirement also. They have some KYC requirement, but they are not strict as it is in India. In India, if you open the bank account, they will ask 100 questions. But there are many countries who are so lenient. They are not bothered. They will welcome you. You want to open a bank account? Open. And what people do? They nicely open the bank account, and whatever black money they were holding in India, they nicely located in foreign bank account. Not necessarily a foreign bank account. They might purchase some property in foreign country, whatever. But this is a tendency of people holding black money. So this government also knows what? Ki people having black money, we usually prefer to locate all such black money in a foreign country so that they are safe in India. Now if suddenly income tax people comes to my house for conducting raid, they will not find anything because I have located everything in a foreign country. So this is the style of people holding black money. That is why government is becoming little bit skeptical. Okay, if you are having some asset in foreign country, there are high chances that it will be some black money. But it's not necessary. There are some good people also. For example, I am earning income in crores and I have paid the tax also. And with that tax paid income, I have purchased a flat in Dubai. So that is not black income. I paid tax on my income, and with that tax paid income, if I buy a flat in Dubai, so it is white ka paisa. What we call it as white ka paisa. So that is okay, na? But then who knows who is honest and who is culprit? That's why, you know what law feels? We though will think you are a culprit. Even though you are honest, we cannot trust that everyone is honest. See, whether you are honest or not, God only knows. But law assumes that people having asset in foreign country, something is fishy. And if someone say, "Arey Baba, nothing is fishy. I am earning the income, I am paying the tax." So that's okay, na? Who is asking you to do something big? We are simply asking you to file the return only, na? File. Filing the return is not a big task. If you are expecting something out of the way, then you can argue. We are good people, we are honest people. It's okay, you are honest. God bless you. But who knows? We though will always have a doubt. That's why any person having asset in foreign country, law says strictly you will have to file the return. You are an honest person, it's okay. But if you are a culprit, then we can keep an eye on you. We can do further inquiry on you. You know, usually a student will get a doubt. Sir, if a person is so culprit that he never paid the tax and he accumulated so much of black money and he has nicely located everything in foreign country, what do you think? He will file the return? People who had got the guts to not pay the tax on so much income and he has nicely located everything in a foreign country, if we expect from him to file a return, he is not going to file the return. Are people who never bothered to pay the tax, if you tell him file the return, what do you think? Will he file the return? He will not even file the return. So what is the rule? What is the purpose of making such rule? Understood my doubt? A person who never paid the tax and he located everything in a foreign country, if you expect a return file, what do you think? He will file the return? The one who never paid the tax, he will not even file the return. So what is the purpose of making such rule? So see, question is good, but you know, by making such rule, people get alert. People get a warning that government is behind us. So that psychological fear controls such tendency. What tendency? Earning the income, not paying the tax, nicely locating in foreign country. These tendencies are controlled psychologically, because when Narendra Modi makes an announcement across India that anyone who is having property in foreign country, he will have to file the return. So just by this announcement, people get scared. So at least those people who are planning such things, what things? Okay, I will also locate my black money in a foreign country, I will not pay tax. Such people will get scared. So basically law wants to create that psychological fear. Otherwise, see, it is impossible to catch a person. Beyond particular extent, you have heard that dialogue of Don. डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है. तो इट्स काइंड ऑफ दिस ओनली. द पीपल हु आर not ready to pay the tax, whatever you do, he will never pay the tax. His mentality is such. But then at least by making the rule, what kind of rule? You will have to file the return. Anyone having property in foreign country, you will have to file the return. Such rule creates fear in the mind of people. So today if I am also planning, I am me, your sir, if I am also planning what? I will also earn the income, I will never pay the tax, and when I get lot of black money, I will locate in a foreign country, I will get scared, because I have a rule at the back of the mind. For such people it is compulsory to file the return. God knows what government will do. So that fear will control me. And I am explaining the logic of making such rule. Otherwise, if a person is not willing to file the return, he will not even file the return. He will say, what? I never paid tax. You think I will file the return? I will not file. So let him not file. God is watching him. But at least we can control some people who are scared. So that is the idea of making Rauso people compulsory to file the return. You know, Rauso, if you see Rauso, what is R in that? Resident. See, it is only for resident people. Law cannot make it mandatory for a non-resident. Because see, if a non-resident is holding property in foreign country, so nothing is fishy. He is a non-resident. Obviously, the one who stays abroad, he will have property abroad. So nothing is fishy. When something looks fishy, when people like us, we are holding property in foreign country, then something is fishy. You are staying in India, you are staying in Mumbai, how come you have property in London, Singapore? Something is fishy. So that's why this rule is only for we people. We means resident people. And see one more thing. What is written over here? Read. Resident person having asset located outside India or having signing authority in an account outside India. Now see, what is the importance of signing authority? You know some people are very smart. They think if I locate my black money in a foreign bank account and if the account is in my name, I will come in limelight. And they don't want to get highlighted. You are having bank account in Singapore, in this country, that country. So he doesn't want to get highlighted because he is scared. So you know what he has done? He has opened a bank account in a foreign country, but the bank account is in the name of his mother. It is in the name of his mother. Mummy ke naam ka bank account he has opened. And you know what he has done? All the black money he has deposited in his mummy's account. Thinking that my mother is just a housewife, no one will even doubt my mother that she might be having black money, etc. So thinking that he has opened an account in a foreign country, but account name is mother's name. It is in the name of mother that account is operated. But then he is scared. What? If I open an account in the name of my mother, mother will take away my money. Because the person who holds the account, it becomes his property. Although I have deposited, but I am scared. The account is in the name of my mother will take away the money and run away. And these people have got no feelings for mother, father, etc. They want money, money, money. So they have such mentality. So you know what such people do? They open the account in the name of mother, but they make an arrangement where his sign is also valid. He will have operating rights. What operating rights? Bank account operating rights. He wants to control in his hands because he is worried that if I open the account in the name of mummy and my mummy takes away the money, then what? So he wants his control also. So to keep his control, he has done such arrangement that his sign will be valid in that account. He has signing authority in that account. He can also operate that account, although officially the account is in the name of mummy. This also people do. And what law says? We are not a fool. Listen to a rule. If you are planning such thing also, so we understand. So now in such case, your mother becomes Rao. You become so. Didn't understand? For us, your mother is Rao, means resident mother, having bank account in a foreign country. So for us, your mother is Rao, and you are so means SO is, what is SO? You are having signing authority in that account. So your mother will also have to file the return. Even you will have to file the return. Your mother will file the return because she is RAO. RAO, resident person having asset outside India. And you will have to file the return because you are SO means having signing authority. So in such arrangement, my mother will also be liable. Even I will be liable. But it's okay. So people who are honest, they don't have to worry. Law is simply asking you to what? Just fill the form of return. So if you are honest, why are you scared? But people who are not honest, they are tax evaders. They will be scared of filing the return, etc. Because they are worried what government will do after I file the return. They will be behind me. They feel scared. So in short, I was explaining about having signing authority in an account outside India. So see here, look at the full form now. Read, what is written? Resident person having asset located outside India. Now see, asset means it can be any asset. Although I gave the example of a bank account, but it is not necessary to have a bank account. It can be a residential house, it can be a land, it can be anything. Asset is a general term. So what is it? Resident person having asset located outside India or having signing authority in an account outside India. So for these people, it is compulsory to file the return even if they say, I don't have income in a particular year, I suffered loss. It's okay, Baba. You have to file the return because of the fact that you are having property outside India, or even if you are not having the property, your sign is applicable in such property. So you will be liable to file the return. So see here, I was discussing about who should file the return. To answer, companies, it is compulsory to file. Partnership firm, compulsory to file. Rauso, compulsory to file. Now what is the next person? FACO. Even FACO is my code word. What is the full form? I will tell you. Look at this. In FACO, F stands for foreign travel. If a person has spent more than 2 lakhs on foreign travel, whether it is his own travel or travel of anyone, anyone means anyone, he has sponsored travel of his friend, son, daughter, brother, mother, anyone, spending more than 2 lakhs, are you listening? Spending more than 2 lakhs on foreign travel, that means you are not a poor person. You are definitely rich people. You are definitely rich person. Usually a middle class or a below middle class person, he cannot afford to spend on foreign travel. They simply roam in India. But once you start earning more income, then you feel like going to foreign country, etc. So that law also knows na. That's why law has made a rule that once you have spent something on foreign travel, and that also more than 2 lakhs, that means definitely you are having good income. You might say, no, I don't have income, I don't have anything to pay as tax. It's okay, don't pay tax, but you file the return. Because we want to keep in touch with such people also. Because you are spending on foreign travel, that means something is there in this person. And what law thinks, whether you pay tax or not, we want to keep in touch with all big people. Companies, partnership firm, they to always are big people. But people like us will also become big people if we start spending on foreign travel of more than 2 lakhs. Whether you go to foreign, send someone else, spending more than 2 lakhs on a foreign travel, that means you are a big person. You will have to file the return. Then next criteria, see, F is done, F. Electricity bills. Spending more than 1 lakh. Spending more than 1 lakh on electricity bills. That is also sign of good status. Because usually annual electricity bill doesn't come to more than 1 lakh. But you are spending more than 1 lakh, that means either you are having a big business where there is lot of consumption of electricity power, that is why you are spending more than 1 lakh, or whatever, you say you don't have a business. At home also, your residential electricity bill also, If you are spending more than 1 lakh in a year, that means you are living in high standards. So this is also a sign of status symbol. See, basically this FACO means what, these are certain criteria which makes government feel that you are having a good standard of living, you are having good standard of income, so we want you to file the return. Even though you claim, I didn't have any income in this year, my tax liability is zero, it's okay, don't pay tax. But that form of return you will have to submit. So what was he spending? You will have to remember the threshold limits. 1 lakh. What was in foreign travel? 2 lakhs. Electricity, it is more than 1 lakh. Then in FACO, next alphabet is C. C stands for deposit in current account more than 1 crore. Depositing more than 1 CR in a current account. In one or more current account with a bank. Means in a bank, I might have 2 current accounts also, 3 current account also. So whether it is 1 account, 2 account, 10 accounts, with a particular bank, if you can deposit more than 1 crore, that too in a current account, that means something is there. Because usually who has current account? Businessman. So firstly, current account is held by a businessman. And that also such current account where you can deposit in 1 year more than 1 CR. That means you are having good flow of income. Otherwise, if you are not having flow of income, why would you deposit so much amount in a current account? And that also the income is flowing in your business. So that also government, that also makes feel that you are having high income. But you might argue, no, this year though I had suffered huge losses, my income was there, but there are so many expenditure, what should I do? It's okay, don't pay tax. We are not arguing with you, you have to pay tax only. We are simply asking you to file the return, because depositing more than 1 CR in a current account makes us feel that you are having definitely good size of income. Now you might show your net profit. See, current account deposit is deposit, na? You might show your net profit as loss. It's okay, we believe your loss. But you file the return, and after you file the return, we will also check what loss you are having. A person who can deposit in current account more than 1 CR, he is having loss. We will also start doing inquiry. But that inquiry can start when? Once you file the return. That's why law is expecting you to file the return. So see, for such people, government will not argue at this moment. They are simply saying you file the return. We will see later. And we'll see later means they are definitely going to inquire what is such that you are spending more than 2 lakhs on foreign travel, spending more than 1 lakh on electricity bills, depositing more than 1 crore in a current account. We will also inquire what is that you are doing such big transactions. But that inquiry will start later. But inquiry can start only if you file the return first. Then in FACO, I did 3 points: foreign travel, electricity bills and current account. Last point, O. O stands for any other conditions as may be prescribed by CBDT. What is CBDT? Central Board of Direct Taxes. Means Central Board of Direct Taxes will make more criterias which will compel you to file the return. So they have created recently 3 new criterias which will compel you to file the return. And you know what are the 3 new criterias? Recently means just 1 year back, announced by CBDT. See 3 criterias. It is TTS. First T stands for turnover of more than 60 lakhs. In case of a business, if your turnover is more than 60 lakhs, you have to file the return. More than 60 lakhs turnover matlab you are growing, you are having high income. Now you might argue, no, Baba, turnover is more than 60 lakhs. I have got so many expense. My net profit is 0. It's okay, 0 net profit. But you file the return. We want to inquire further. How come you made turnover of more than 60 lakhs and not paying the tax? Means right now government is not forcing you to pay the tax. You pay 0 tax. But once you file the return, government will start doing inquiry. And this is a case where inquiry is must, because your sales is more than 60 lakhs. But 60 lakhs is applicable in business. There are some people who are professionals, chartered accountants, lawyers, doctors. For them, the threshold is 10 lakhs. Business 60 lakhs, profession 10 lakhs. Means for a professional, if your gross receipts means collection from your clients and customers. For example, if I'm a doctor gets what collection? Collection from patients. So whatever collection he has generated from his patients, if that exceeds 10 lakhs, doctor is also liable to file return. It's not about doctor, every professional. If his gross receipts exceeds 10 lakhs, return filing is must. So see, I was discussing about TTS. T stands for turnover. Turnover in a business should be more than 60 lakhs, and in case of profession more than 10 lakhs. Then filing return is must. Then another T is TDS and TCS. TDS is tax deduction at source. TCS is tax collection at source. What is TCS? We'll be discussing at length later on. Right now, you might have heard about these terms, TDS and TCS. To see, if in respect of a particular person, 50,000 or more is the amount of TDS and TCS. Imagine in my name, there is tax deduction of 50,000 or more. So that is a sign of having huge income. When TDS is deducted? TDS is deducted on some income. Na? So if 100, 200, 10,000, 1,000 TDS deducted, that means my income is less. But in my case, 50,000 or more is the amount of TDS. So that definitely implies what? That definitely implies that my income is huge. Because TDS is usually some 10% of that income amount. So even if you roughly catch 10%, 50,000 TDS makes us believe that income of 5 lakhs. But that is TDS wala income. There might be some other income also. So in case of a person where amount of TDS plus TCS, it is TDS plus TCS, if it is greater than or equal to 50,000, you have to compulsorily file the return. Then TTS. What was first T? Keep memorizing everything, because see, you don't have to sit here as an audience to listen to something. You have to sit here as a student. What is the difference between audience and student? Audience simply watch the show and go away. But you are a student, you have to listen to everything and by heart online right now only. Means you cannot think, I will study later on my own. Later on, that time never comes. You have to study parallelly in the class itself. If I would have been a student, what I would have preferred, whatever sir is explaining, let's start memorizing from now only. Because ultimately it's all about remembering. In exam, you don't have book with you. All the exams are not open book exam. You have to write on your own. But to write on your own, you should memorize. But that memorizing thing, you should start now only in the class. To start memorizing. To see, in TTS, tell me if you memorize, tell me what was T? Turnover greater than 60 lakhs. But that is for a businessman. But for a professional, more than 10 lakhs. Another T, TDS plus TCS. Greater than or equal to. Did you listen properly? In turnover, I said greater than 60 lakhs. The sign was greater than sign. But in TDS, I said greater than or equal to. Greater than or equal to 50,000. Then last, savings account. Savings account, if you deposit more than equal to 50 lakhs. Then also high standards. High standards, you will have to file the return. Even if you say my income is 0, my tax is 0, Baba, don't pay tax. But file the return. Because depositing more than or equal to, here also equal to signs there. Depositing more than equal to 50 lakhs in a savings account is not a small thing. Na? See, if you analyze, in current account, if I deposit more than 1 CR, then filing return is must. But in savings account, it's not more than 1 CR, it's more than 50 lakhs. Because in savings account, usually people don't keep money. Are big businessmen, they keep all their money in current account. In savings account, they keep less money. So that's why the threshold is less. Even if you deposit 50 lakhs, file the return. But in current account, depositing 50 lakhs is not a big deal here. Because in a running business, there is continuous flow of revenue from customers. So their government cannot say 50 lakhs hote return file. You have to file return only if it exceeds 1 CR. And we are just comparing current account more than 1 CR, savings account more than or equal to 50 lakhs. I'll just open up the full forms now. Watch the screen. Okay, recap. Foreign travel, you have to spend how much? More than 2 lakhs. Whose foreign travel? Either myself or anyone else's. If amount spent on foreign travel is more than 2 lakhs, return filing is compulsory. Then start memorizing. Spending on electricity bills more than 1 lakh. Then also return filing is compulsory. These are all status symbols. Then current account deposit more than 1 CR. But this is with a particular bank. If I have deposited with 2-3 banks, then each bank amount is to be taken separate. In one account, in one bank 50 lakhs, another bank 70 lakhs. So in total it is 1 CR, more than 1 CR. But then two banks are different, because in the act they have written deposit in current account, in one or more current account with a bank, depositing more than 1 CR in one or more current accounts with a bank. So with a bank means with a particular bank you have to see if you have deposited more than 1 CR, return filing is must. Then what was FACO O? In FACO what was O? Other prescribed conditions. See, these are conditions only, turnover, TDS, savings account. So these conditions, who has prescribed? CBDT. So CBDT has prescribed 3 more conditions. See, actually first 3 points are written in the act itself. First 3 points in FACO are written in the income tax act only. But this last point of O, it is not written in the act. What act says? CBDT will prescribe. CBDT will prescribe. So CBDT has prescribed 3 criteria. One is turnover more than 60 lakhs or 10 lakhs in case of professionals. Then another T is TDS plus TCS greater than equal to 50,000 for a particular year. So for that particular year, return filing is must. Then savings account greater than equal to 50 lakhs. Deposit in savings account. It's not how much balance you are having, how much you deposited in this year. You might have balance of 2 crores also, but in one particular year, how much you deposited, that matters. So if you have deposited greater than equal to 50 lakhs in savings account, then return filing is must. See, till now we were discussing this only. What? Companies, partnership firm, Rauso and FACO, for these 4 people, it is compulsory to file a return whether you have loss, profit, zero income, irrespective of the size of the income. It is compulsory for to file the return. So these are 4 people: companies, partnership firm, Rauso and FACO. Okay. Then what about others? See, for other assessees, what law says? See, you don't have to bother to file the return if you have very less income. For others, what law says? You don't have to bother to file the return if your income is less. But yes, if your income is big, then even you have to file the return. Now, what do you mean by income is big? Just a moment. So for others, return filing is must when? Only if their income is big. Now see, income big means what, Read what is written over here. Read what is written. File only if GTI. What is GTI? Gross total income before exemption under section 54, 54B, etc. if it is greater than basic exemption. Now what is this? I will explain. Wait. Firstly, tell me what is gross total income? Total of 5 heads. Just name the 5 heads. Since we started DT today, it is auspicious to take the name of 5 heads. First head is income from salary, income from house property, income from business, capital gains, income from other sources. Total of these 5 heads is called gross total income. And then after gross total income, there is something called deduction under chapter 6A. And then what you get is net taxable income. And on net taxable income, we are supposed to calculate the tax. And now, what is this basic exemption? Basic exemption means in our slab rates. Slab rates, what is the first slab? You know what are the slab rates? Up to 2,50,000, the tax is 0. Greater than 2,50,000 up to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. About 10 lakhs, 30%. Don't worry, these tax rates also we are going to discuss at length. But right now I am expecting some basic idea we have. So in this slab rates, if you see the first slab is having only 0% tax. That first slab is called basic exemption. And our first slab is up to 2,50,000. So 2,50,000 is called the basic exemption. So this means what? If anyone's, look now, if anyone's gross total income is greater than 2,50,000, that means greater than basic exemption only, na? If someone's gross total income is greater than 2,50,000, then for him return filing is must. Now see, greater than 2,50,000, you understand the reason also. Because if it is greater than 2,50,000, then only there will be some tax liability, na? And only if there is something like payable, then only you have to file the return, na? But then that is okay. Why the criteria is GTI? When we calculate the tax on NTI, the criteria should be NTI. What is NTI? Net taxable income. See, we calculate tax on what? This figure, net taxable income. So you should have a doubt that when tax is computed on net taxable income, then why are we deciding based on gross total income? What are we deciding? Whether I have to file the return or not, that decision is based on gross total income. Alright, that doubt should come. Okay, why the decision is based on gross total income when we calculate the tax on net taxable income? Bring the doubt out. So see, reason is what, you know? Although we pay the tax on net taxable income, but you know, net taxable income sometimes comes to 0 also for people who are very rich also. You know, NTI is such that it doesn't give the true picture. For example, if a person's NTI is nil, but even if this person with nil NTI might be a rich person earning income in crores. How come it's possible he is having income in crores and my NTI shows nil? Chapter 6A, imagine a person's gross total income was actually 5 CR. But when it came to net taxable income, it became 0. It happens many times. How? After gross total income, what is there? Deduction under chapter 6A. Now deduction under chapter 6A, sometimes you get huge deductions. Don't think about 80C, 80D. If you think about those CA interwala sections, you will not get convinced. How come 5 crores ka deduction? Think about 80IA, 80IB, 80IC. These are some sections which you didn't study at CA inter level. Which section? 80, IA, IB, IC. There is a big series of I wala sections. Do you know these I wala sections provide you 100% deduction of your profits, but only to certain business. there are certain priority business in India to whom government gives importance, their 100% profits are exempted. Means imagine if I am that priority business, if my profits are 50 crores, 100% deductible. This kind of incentive is there in 80, IA, IB, IC, this I kind of sections. So it might happen that because of 80 I wala section, a person whose gross total income was only 5 crores, sorry, only what? A person whose gross total income was 5 crores became to only 0. How did it happen? Maybe he might have claimed deduction under 80 IA, IB, etc. And because of that deduction, I said, no, it's possible. 80 IA, IB can give you deduction in crores also. Even if someone has earned 100 crores of profit, full deduction. But it is not for everyone. It is only for few business which are important for the country. Now, which are those important business? We'll be discussing about it later. Right now, you just want to have a feel that it is possible that a person whose gross total income is 5 CR in my example can even become 0. So now you only think if 0 was the criteria to decide whether to file the return or not, then 0 income people, they will never file the return. But don't you think such people should file the return? Because he is not poor. Looking at 0, we feel he is a poor person. He is not poor. A person who has got gross total income of 5 CR, you think he is poor? He is a rich person. But he looks poor because of Chapter 6A deduction. And Chapter 6A deduction has not made you poor. It has given you incentive in tax. And because of that, it has become nil. So that's why law says we will not keep the criteria as net taxable income, because NTI doesn't give the true picture of your standard. Because for such person, NTI where it is nil, it looks he is not having any income. But boss, he is having 5 crores income. That's why law says you pay tax on NTI. But to file the return or not, decide based on GTI. What did I say? You pay tax on NTI. Means for these people in my example, you pay tax on NTI means your NTI is nil. Tax is 0. Don't pay tax. But you will have to file the return because your gross total income is more than basic exemption. And 5 crores gross total income means we also want to check what is there in this person that is having 5 crores of income. So inquiry is must. Although after inquiry they will realize nothing was there, he is an honest person, genuinely claiming Chapter 6A deduction. It might happen, but God knows he might have taken false deductions. So that's why inquiry is must, but that inquiry will start when? Once you file the return. See, understand one thing, paying the tax is different, filing the return is different. See, paying the tax, a person having NTI of 0, he will not pay tax. But see, tax pay means you don't have to pay some money. But filing return is what? You have to fill a form online. That form you are supposed to file. Once your GTI is more than basic exemption. So conclusion is what? Pay tax on NTI. Pay tax on NTI. But filing return, decide based on GTI. But GTI also before exemption under 54 wala sections. Now comes one new point. Under the head capital gains, there is one series of 54. Series, there are actually 9 sections. 54, 54B, 54D, 54 EC, EE, F, G, GA, GB. This way there are 54 sections. And under 54, you get huge exemptions of capital gain. So if someone has claimed exemption under 54, so claimed exemption means you have deducted your capital gains, add back. Whatever capital gains were deducted in the name of exemption under 54, you have to add back and you have to find your income before 54 exemption, and then you have to decide. Why now? Why we have to see the income before 54 exemption? Sometimes back I explained you why we see the income before chapter 6a. That logic I explained na, that why do we see income before chapter 6a? Because chapter 6a will make a rich people also poor. A person having income of 5 crores also, because of chapter 6a it can become nil. And based on nil if we decide, so it's wrong. Because this person is not poor. That's that logic I explained na. Same logic you can think in terms of 54 also. Now my question is, why do we decide based on income before 54 exemptions? So see, for example, look here. In 154 everyone knows. Plain 54 section means without 54B, D, without any alphabet. You know the plain 54 section everyone knows. What is that? Whenever you sell a residential property and against that property if you buy another residential house, so your capital gains is exempt. So imagine I have sold one residential property and I have made a capital gains of say 7 crores. 7 crores capital gain by sale of residential property. But you know that 7 crores became fully exempt. Why? Because after selling residential house, I purchased another residential house, and there is a rule, when you sell house and then back to back if you purchase another house, your capital gain can become exempt. So just remember my amount. In my example, what was my original capital gains by selling the house? 7 crores. But it became exempt because of 54. Because I purchased another house in return. So see, with calculation, my capital gains was originally 7 crores. But since I got exemption of full 7 crores under section 54, my capital gains ka head has become 0. Now just imagine I don't have any other income. Imagine I don't have any other income. Everything is 0. So capital gains 0. Everything else also 0. So 0, 0, 0, 0. So my gross total income 0. Forget chapter 6a. My gross total income itself has become 0. Now deciding based on GTI will again become wrong. Because this person GTI is nil. And it looks only nil. Is poor. He is not poor. Person who has made capital gain of 7 crores. Can you imagine? You sold your house property and you made a gain of 7 crores. See, 7 crores is gain. Imagine the sale proceeds. 7 crores is the profit element. Imagine sale proceed will be even higher. So imagine the person who has got strength of generating 7 crores capital gains is not a small person. But looking at GTI, he looks small because GTI has become nil. And you know in GTI what happens? All the exemptions are netted off. You know what is gross total income? In gross total income, why do we say gross? Gross because chapter 6 is pending. But everything else is netted off. People think, sir, it is gross. Gross means what? Gross means only chapter 6 is pending. That's why we call it as gross. Otherwise, everything is netted off in GTI. So even my 54 exemption is netted off in GTI. But after netting off 54, my GTI has become 0. And this guy looks to be poor. And thinking poor, if we say don't file return, it's wrong, na? A person who has got strength to create a capital gain of 7 crores, it is necessary to keep an eye on him. And to keep an eye on him, it is necessary that he files the return. That's why law says, okay, if you have claimed exemption under 54, then simply GTI will not be the criteria. In GTI, we will add back. Why I have to say add back? As I said, now in gross today income, everything is netted off. Net means net. So even 54 is netted off. So we will add back 54. To add back in my example, in GTA of 0, if I add back 7 crores, my figure will be 7 crores. Based on 7 crores, you have to decide. Decide now. Is 7 crores more than 2,50,000? Yes, file the return. In short, see, now you should be thinking, but sir, why government is behind 54 only? Now you only think, tell me, out of these 5 heads, the biggest exemption which you can get is in capital gains only under 54. Little bit idea you have now based on CA entire. In income from salary also you have seen exemptions. But have you heard about huge exemptions in income from salaries? And anyways, income from salary people, government is least interested in them. Why? Because their entire salary is subject to TDS. So they will never be able to cheat income tax department. But still, if you think, in salary also you never imagined exemption of crores. I am trying to make you realize capital gain is the only head where it is possible that people take exemption in crores. Rest all head you only check. Salary, there are exemption like 10, gratuity exemption is there, pension, you might have learned that in CA Center. But those exemptions are not that big, na? Then house property you hardly get any exemption. House property, one benefit is a 30% standard deduction. But that is nothing. Then income from business, there are hardly exemptions. If there is something, you have got more expenditure. But that is genuine expenditure, means there is no abnormal benefits of crores kind of in other head. But in capital gain, if you notice, people have taken exemptions of 10 crores. But that is possible thanks to 54 sections. So that's why government said, see, we are not interested in other head. But under capital gains ka head, if you have claimed any of the 54 wala exemptions, then you claim the exemption, but we will add back that exemption and decide whether you have to file the return or not. See, add back means it is just for the sake of deciding whether to file the return or not. Otherwise, exemption is there, you will claim exemption, and after exemption income is nil, so you don't have to pay the tax. But for deciding whether to file the return or not, you will have to add back 54 wale exemptions. Okay. To conclusion, look at this now. Look at the screen. How will you decide whether to file the return or not? Answer step by step. Will you decide based on NTI? No. In NTI, you have to add back chapter 6A. Add back means it is gross total income only. In NTI, if you add back chapter 6A, you will come to GTI. And even in GTI, you have to add back what? Section 54 exemptions. And then you have to decide whether it is greater than basic exemption or not. And if greater than basic exemption, filing return is must. This I was talking about others. So conclusion, one thing I have explained, who has to file the return? To answer, companies, partnership from Rauso and FECO. It is compulsory to file the return irrespective of the size of the income. The status is such that will compel you to file the return. It is status based. What did I say? Status based. Company status, partnership firm, having property in foreign, FECO. Status is making you compelled to file the return. But for other people, status is not important. Income, money. If you are having more money of income, then file the return. Means for other people, income is the criteria. And that income should be greater than basic exemption. Which income? Gross total income, read. Before exemption under 54. Actually, gross total income is after netting of everything, na? but you will have to add back this 54 wala exemptions. Okay, then see what did I say? Okay, wait, first let me explain why this section is called voluntary return. Name of the section is what? Voluntary. Why it is called voluntary? See, voluntary means what law expects you file the return on your own. Don't expect that we are going to call each and everyone. File the return, file the return, file the return. Do you expect income tax department to do this? But there are people who think we were not told. We were not asked to file the return. What you were not asked? We are not going to ask each and everyone. There are so many people in India earning income. You think we are going to ask everyone? Okay, file, file, file. Did you file? Not file, please file. So don't expect people will ask, don't expect government will ask you to file the return. It is your duty to file on your own. And when I do something on my own, what do you say? Voluntarily done. Voluntarily done, matlab you have to do it on your own. And it is obvious, na, we have to do it on your own. Now students saying, so that to we do it on your own, na. But see that do it on your own, that culture, who created? Section 139(1) created the culture, na. That is why in your articleship also you have seen everyone files on their own. But that on their own culture, who created? Section 139(1), because the heading of the section says voluntary, means file it on your own. But sometimes there are people who don't file on their own. So for such people, government will send a notice. You didn't file on your own. Now I am asking you to file. I means income tax officer. He will send a notice. But that is at a later stage we will study. Okay, when they send a notice, how they send a notice, etc. But just to keep in mind, usually you are supposed to file the return on your own. But in case you don't file on your own, they will ask you by sending you a notice. There is something called notice under section 142(1). That will come later. Anyways, right now my object was to explain why it is called voluntary. Means it is filing on your own. Okay, then in section 139(1), I told you that we are going to study three things. What three things? Who should file, when to file, how to file. Who should file is done. Now next point is when to file. Now look at the screen. When to file. Now when to file means you have to study the due dates. There are certain due dates which you have to remember. So see here, first understand this drawing. See, we earn income in one particular year, but we pay tax in next year. Or I can say we earn income in one particular year, but that computation of income we submit in the next year. Means we file the return in the next year. So return is always filed in the subsequent year, na? So the year in which you earn the income is called previous year. And the year in which you pay the tax is assessment year. Because in this year, our income is being assessed, it is being checked, it is being taxed. And this year you file the return. And for May 24 and November 24 students, our previous year will be 23-24. Just fix this right now only in your mind. Because every time I explain something, I will keep in mind the previous year of 23-24. Come on. 23-24 is the fixed previous year. And our previous year is why 23-24 only? Actually, what is the logic? The month in which you give the exam is always assessment year. So tell me, when are you going to give the exam and pass? May 24, you will give the exam and pass. Even if students say, no, I will be appearing November 24, it's okay. Whether May 24, November 24, check in my drawing. Where does May 24, November 24 fall? I'll show you. See, this is March. After that, see, your May 24 exam comes. And if a student skips May 24, then next attempt is Now that also comes in the same financial year. And the logic is what, the financial year in which you appear for the exam is treated as your assessment year. So this way you have to decide. People do not know about this also. Many times students come to me, sir, which year is applicable for me? Why this question should come? Which year is applicable for me? You should know. And how to know, tell me? Just ask yourself, when are you going to appear in the exam? And when you appear for the exam, that is your assessment year. And immediately previous year will be the previous year. So that's why in your case, your previous year will be 23-24. Anyway, this was general discussion. Now, when to file the return? So see, usually people file the return by 31st of July. 31st July of the assessment year. But for some people, it is 31st of October. For some people, which people? CAP, CAP. C for companies. For companies, the due date of filing return is 31st of October. A for, there is a code word CAP, CAP. Can you see CAP? C for companies. A for audit assessees. Assessees whose accounts are subject to audit. Audit assessees. Then partner of a firm whose accounts are subject to audit. For these three people, due date is 31st October. Now why? For every rule you have to understand the why factor. So see, 31st October I told for whom? Companies, audit assessees and partner of a firm whose accounts are subject to audit. So tell me one by one. Why companies are supposed to file the return by October and not July? Because being a company, it is compulsory for you to get your accounts audited. Even if income tax law doesn't require, Companies Act 2013 forces every company to conduct audit. And since companies have to conduct, they have to get their accounts audited, they need more time to file the return. And filing the return by July, they will have less time. July comes after 4 months only. See, your year ends in March, then April, May, June, July. So July comes so fast, and it is not possible to file the return so fast, because unless the books are audited, how will you prepare the returns? So that's why, since you have to get your accounts audited, law has provided you more time. More time means what? See, check now. More time means, look, April, May, June, July, August, September, October. Till October you can file the return. So feel in my drawing you are getting more time. And more time because you need time for audit. And after audit is done, you can get your returns prepared. Na? That's why companies have to file the return by 31st October. And then what was my keyword for 31st October? CAP. C was companies. What is A? Audit assessees. Now audit assessees means these are not companies. A sole trader, partnership firm, anyone whose accounts are subject to audit. But now this audit is under income tax. And under income tax, if someone's turnover is more than 1 crore, audit is must. In income tax, someone's turnover is more than 1 crore, audit is must. So again, if audit is must, you need time. So law has given you time. That you also file the return by 31st of October. You means who? Whether sole trader, partnership firm, etc., who are liable to get their accounts audited. See, idea is what, whether you are a company or not a company, if you have the headache of getting your accounts audited, you will be given more time to file the return. So 31st October, one was companies, second was audit assessees, next P stands for partner of a firm whose accounts are subject to audit. Means now partner is a partner in a partnership firm, but partnership firm's turnover is more than 1 CR. Why I am saying 1 CR? Arey 1 CR, this is the limit for tax audit. Tax audit you heard. 44 AB, there is something called this. I'll be explaining later this thing in PGBP. What is PGBP? Profits and gains from business or profession. In the chapter of business, I'll be explaining this. But you might have heard na, that everyone whose turnover is greater than 1 crore, they are liable to get their accounts audited. So now imagine a partnership firm is subject to audit. So for partnership firm, the return filing date will be October. Even for the partners, due date will be October. Means it is like this. If for the firm, due date is July, partner also July. Firstly, do you know one thing? That in case of partnership firm has to separately file the return, and each individual partner will also file the return. Because in the eyes of law, they are separate entities. So firm also files the return, partners also file the return. So that's what law says na, that if firm is liable to file by July, partner also file by July. If firm has to file by October, partner also file by October. Basically see, firms and partners assessment is done parallelly. Basically see, partnership firm and partners income are interrelated. Na? Why they are interrelated? Best example, partnership firm might have given salary and interest to the partners. Partnership firm might have given salary and interest to the partners. So that is an expenditure for the firm. But for the partner it is income. Na? So it is connected. Means what is an expenditure for the firm is income for the partner. Means which thing I am talking about? Salary and interest paid to partner. So since their returns are interrelated and interconnected, what law feels? Both the entities should have the same date. Means what date is there for firm, same should apply for the partners also. But how to decide the due date of the firm? Audit. If firm is supposed to get the accounts audited, then October, otherwise July, and depending upon firm ka due date, we decide the due date of the partner. So see, I was talking about when to file. So when to file, usually people file the return by 31st of July. But this cap people, they file by 31st of October. What is cap? Companies, audit assessees and partner of a firm whose accounts are subject to audit. Everywhere audit is the reason for giving extended time. Then there is one more assessee called transfer pricing assessees. They have to file the return by 30th of November. It's not even October, it is October. It's even after October, it's 30th November. For whom? Transfer pricing assessees, they have to file the return by 30th of November. Now, again you may have a question, why 30th November? But see, for this I cannot explain the logic now. Because unless you understand what is a transfer pricing assessee, I cannot explain the logic of 30th November ka due date. And right now it is not possible. Within a minute only I'll explain what is transfer pricing assessee. There is a big chapter. Transfer pricing is the most famous topic in CA Final DT. It is such an important topic that within 1 minute I cannot give you an idea. And I cannot convince you why the due date is 30th of November. But till the time transfer pricing topic is done, just by heart it as a rule. Because right now explaining the logic will not be possible, because for that I will have to explain what is transfer pricing, etc. And that will take time. So just by heart mechanically, transfer pricing assessee, there are some people called transfer pricing assessee. God knows who are they, sir will explain later. But for them the due date is 30th of November. So look at the screen, jaldi dekho. Look. Normally the due date is 31st of July. Normally. And for cap assessees, 31st of October. And therefore, what is TP assessee? Transfer pricing assessee, it is 30th of November. So by this date you have to file the return. Means look at the drawing. Precisely in this period, we have to do our computation. In the previous year, you were busy in earning the income. And then in this period, you start doing the computation of your previous year's income. And then that computation you have to submit in a form. When you file the return, there is a form to be filled, which is called ITR. So next point is that only. Look, how to file. How to file? How means you have to fill the form. There are some prescribed forms which is popularly called as ITR, income tax return. So that form is available online in the website of income tax department. So that form you have to just fill and upload the return online. So how to file was a small question. Answer is small. Return should be filed in a prescribed form. Now which form, who has to fill, all this is not tested in academics. Means when you appear for your ICAI exam, they will never test on which assessee has to fill which form. Yes, in articleship, this is a special skill. You should know which assessee has to fill ITR 1, who has to file ITR 4. But that ITR numbers, that knowledge is required only for your articleship purpose. But when it comes to main exam, in academic purpose, they don't test the knowledge of which form you have to fill. You just have to remember, yes, there are certain forms which you have to fill online. Complete. One section is done. Section 139(1). So what was the summary of this section? Who should file return, when to file, how to file. Who should file was a big theory. Who should file? Fatabat. Companies, partnership firm, Rauso, FECO, compulsory to file irrespective of the size of the income. And for others, compulsory only if the gross total income before exemption under 54. If that exceeds the basic exemption of 2,50,000, then only it is compulsory to file the return. Otherwise, no need to file the return. Okay, because small people, government is not interested. Because in other people, they say only if you have got good income, you file the return. Otherwise, not needed. Fir, after who should file, next was when to file. That was simple. When to file means due date. Normally July, cap assess is October, transfer pricing assess is 30th of November. And then how to file in prescribed form, which is called ITR. Section 139(1) is done. So one section we have done, section 139(1). Now look at this. Don't lose the grip of the topic. Because see, whenever we go for big topics, you have to keep yourself tied up in the chain, in the link. So see, this chapter's link is like this. First, I am teaching my students the provisions related to returns. Still this is going on. I have just done only one section of returns. So returns theory is still going on. After that we will be doing inquiry and then assessment and then other sections. In returns, one section which we have done is 139(1). Even this thing was in 3 parts. Who should file, when to file and how to file. So this way one section is done. Now next section, section 139(4)(a). This section is specially dedicated to charitable trust. One special section, section 139(4)(a), dedicated for charitable trust. Because see, charitable trust, they are usually under the impression of what, our income is fully tax free. Why should we even file the return? They think that their income is, firstly, do you know one thing or not? Every charitable trust will get full exemption of their income, subject to fulfillment of certain conditions, obviously. But usually charitable trust ka total income is exempt from tax. There is one section, in fact 2 sections, section 11 and 12. Under section 11 and 12, income of a charitable trust is totally exempt from tax if some conditions are fulfilled. So every charitable trust is under what impression? We don't have to pay tax, no? Then why should we even file the return? But in that way, if a trust doesn't file the return, how will income tax check the charitable trust? Because even sometimes a charitable trust is tax evader. They also hold black money. See, it sounds like charitable trust. They are so good people. Not necessary. Sometimes in the name of charitable trust, you do all malified activities. It looks like charitable trust. They are so good people. They are doing some relief for poor. They are providing free education. They are providing old age home. They are providing hostels for children, etc. So you feel they are good people. Okay, they are good people. But sometimes in the name of charity, you are doing all bad activities. That's why income tax people, what they think, we want to keep an eye on charitable trust also. But how to keep an eye? Only if they file the return. Because if they constantly file the return, income tax people can keep an eye on them. Otherwise, if income tax people says charitable trust, you don't have to pay the tax now. No need to file the return. Now, if they never file the return, how will government check them? And checking is also must. Because see, their income is exempt. But exemption is subject to fulfillment of certain conditions. So income tax people, they think we want to check the conditions also. Whether the conditions are fulfilled or not, whether they genuinely deserve the exemption or not, all that needs to be checked. But that checking is possible when they file the return. So that's why law has made a special section to convey a message to all the charitable trusts in India, that all the charitable trusts and all the religious trusts, although we have exempted your income, but still you will have to file the return. Because we want to check you. Firstly, we want to check you whether you are a genuine charity trust or not. And even if you are genuine, whether the exemption we have claimed, all the conditions are being satisfied or not. All that we want to check. And for checking, it is necessary to file the return for them. But you know, if law doesn't create a section for them, which section? Section 139(4)(a). If law doesn't create a special section for them, all the charitable trusts will take it lightly. They will never file the return. But law wanted them to take it seriously. It is serious for you to file the return. And to create that seriousness, section was must. Now see what this section says. Look at this. Section 139(4)(a) says, every charitable trust will be compelled to file the return. But here also you will check one threshold. Threshold means you will have to check one limit. If their income before claiming the exemptions, if it exceeds the basic exemption, then only they have to file. Means sometimes even charitable trust will be exempted from filing the return. If a charitable trust says, "Arey Baba, our income is hardly 2 lakhs. After exemption, though it has become 0. What trust is saying? Our income is only 2 lakhs and after exemptions, so it has become 0. But that means they have claimed exemption only 2 lakhs. And even if they don't claim the exemption, without exemption also their income is only 2 lakhs. On 2 lakhs, so anyways there is no tax. You know, by the way, charitable trusts are also supposed to pay tax as per slab rates. This I will be teaching in a separate topic of trust. Trust ka topic is most important for CA final. That will come as a separate chapter altogether. And that time you will study that charitable trusts are supposed to pay tax as per slab rates. So imagine a trust's income without even claiming the exemption, it is only 2 lakhs. After exemption, though, it will become 0. So for such trusts, there is no need to file the return. Because what law thinks, even if you have claimed exemption, at the most what will happen? That exemption was wrongly claimed. But we are not bothered to check. Even if the exemption in worst case was wrongly claimed, without exemption also your income is only 2 lakhs. And 2 lakhs though, anyways there is 0 tax. Then you don't have to file the return. Basically law wants to check whether you have taken the exemptions in a proper manner or not. But for a trust having income of only 2 lakhs, even if they have taken exemption in wrong manner, what happens? 2 lakhs has become 0. Even if it is not 0, on 2 lakhs, so there is no tax only. So for such trust, return is not required. Or in short, what I mean to say is, trust will have to see their income before claiming exemption. So in this 2 lakhs wala example which I was saying, what was the income of the trust before exemption? 2 lakhs. After exemption 0, but before exemption is 2 lakhs only na. But now, if a charitable trust income is 2 crores, after exemption it has become 0. Which exemption they are getting, you know? Exemption under section 11 and 12. Under these two sections their income becomes completely exempt. But let me tell you, it is not that easy also. They have to fulfill many conditions. But a genuine trust is able to fulfill all the conditions. But whatever, if a trust income is 1 crore, 2 crores, then if they have taken full exemption, so after exemption, so their income will be 0. And if 0 becomes the criteria to file the return, so imagine a trust who has earned income in crores will not file the return. That would be wrong now. We want to check them. That's why what law says, please don't see your income after exemption. Because our section 11-12 is such that it will exempt you everything. But after exempting everything, the income will become 0. So please don't see 0 and decide. See the income before exemption. If that amount exceeds 2,50,000 basic exemption, then filing returns is must. Look at the screen. Look. In short, you have to remember this much. Although I have to talk a lot to convince you about the thinking and the logic. Otherwise, if I don't have to talk about the logic, read this, done, next. But that is the wrong way of studying. Many students study like this only. Okay, it is like this, next. Like this, next. Like this, like this, like this. So many things. You will go mad. If you really want to gain confidence in DT, the only key is understand everything with logic. You know, in that process, although the subject will be very lengthy, but you will never be scared. You will rather start loving the subject if you understand with logic. And that is what I am putting my efforts on. That's why on this small thing also I have to talk a lot. Basic idea was to convey what? Okay, if this thing is not kept before exemption, then to every trust ka income after exemption, to it becomes 0 only, na? But law wants to check whether the exemption was validly claimed or not. That's why law says, forget your exemption. Okay, after exemption income is 0, don't pay tax. But to decide the filing of return, you have to add back all your exemption and check. For people like us, what we do? We add back chapter 6A. For people like us, what is the criteria? People like us, we add back chapter 6A, matlab we take gross total income, and in that we also add back 54, and then we decide. Because in our life, our major tax incentive is chapter 6A and 54. But in the life of trust, the major exemption is 11 and 12. That's why law says, forget chapter 6A for these people. Anyway, charitable trust and all these people, they are usually not inclined towards chapter 6A. Then their main tax incentives is 11 and 12. So that you have to reverse and see. And if before exemption of 11, 12, if that total income exceeds basic exemption, return filing is must. And who is liable to file the return of trust, Who means the person? Who will be that person who is responsible to file return? The person who receives the income on behalf of the trust. Usually the trustee. But law has not mentioned the word trustee. The person who receives the income on behalf of the trust, that receiver is liable to file the return. And that fixing the liability is must. Because in case a trust doesn't file the return, who will be held responsible? That receiver. So see, even that I have written, look here. Receiver should file. Done. Section 139 4A done. Similar to section 139 4A, there is one section 139 4B. But only difference is what you know? This is for political party. Just as charitable trust claims their entire income exempt. Come on. Just as charitable trust claims their entire income as exempt, similar advantage is given to political parties. It is not politician, political party. Congress, BJP, Shiv Sena, parties. I am talking about parties. So these political parties like Congress, etc., their income is also completely exempt. Under which section you know? Under section 13A. This section exempts the income of a political party. What income a political party has? Like trust, even these people have donations. For example, I am Congress or BJP. So what is the source of my income? Donations. Because Congress, BJP, they don't do any business. They don't even do any job. Congress is a party, he is not a person. So their source of income is usually donations. So just as charitable trust gets donation for running the trust, similarly political party also gets donation for running the party. So they have also income in the nature of donation. But even their income is exempt under section 13A. And in fact their income is also fully exempt. And thinking that their income is fully exempt, even a political party will be under an impression that why should we file the return? Our income is anyways tax free. So when we don't have to pay the tax, why should we file the return? But that's wrong, na? What law says? You don't pay tax, okay? But we want you to file the return because we want to keep an eye on political parties also. Because these political parties, Congress, BJP, etc., sometimes their activities are not genuine. They do all malified activities. It looks like they are good people, but sometimes they are not good people. So whether they are good or they are bad, whether their income is genuinely exempt or not, all that needs to be checked. But that checking is possible when they file the return. But to make them file the return, a section is must. And that section is 139 4B. Rest everything is same. See 139 4B. Provisions of this section, look, it is ditto same. Means here what did I say? Tell me here in trust. You have to see the total income before exemption under 11 and 12. But now you have to see the total income before exemption under section 13A. Because income of political parties exempt under 13A. So we will see the income before exemption under 13A. If that income exceeds basic exemption, filing return is must. And for a political party, you know who is the responsible person? Chief Executive Officer. Every political party has a Chief Executive Officer. It is his duty to file a return. So in case there is a failure on the part of a political party to file a return, who will be held responsible? Who will be punished? The Chief Executive Officer. So even that responsibility fixing is done by section 139 4B. Look, I have written everything. Compare. Wait. Distinction between, in the form of distinction between, you can remember 139 4A, 139 4B. This is for charitable trust. This is for political party. Both the entities, apparently they are very good people. But God only knows where they are genuinely good or not. So checking is must. Then one more common thing. Both the entities claim full income exemption. But subject to condition. But God only knows whether those conditions are being satisfied or not. So that we need to check. That's why law is behind them to file the return. And what is the criteria for them? Look, for a trust, we have to see the income before exemption under 11 and 12. And for a political party, we have to see the income before exemption under 13A. And the criteria of threshold. Threshold means the limit is the same. The figure should be greater than 2,50,000, means greater than basic exemption. That is a common thing. And what was the next distinction? In trust, the receiver is supposed to file the return. But in political party, chief executive officer is supposed to file the return. Two sections are done. 139 4A, 139 4B. Okay, now next section. Next section is 139 3. Section 139 3. This is about return of loss. Section 139 3 is about return of loss. Now you know why it is necessary to make a section for loss? Because usually a person having loss will be of what mentality? On losses, so I don't have to pay the tax. Nah. So when I don't have to pay the tax, why should I even file the return? People suffering loss have the mentality of what? On losses there is no tax. And when there is no tax, why should I file the return? They have this mentality. But then people forget. On losses you don't have to pay the tax. But these losses you carry forward. And when you carry forward, you adjust some income only, na? And on income so there is tax, na? So on the loss of current year, there may be no tax. But this loss you are going to carry forward. You know, income tax allows us to carry forward the losses for 8 years. So when you carry forward the loss, you are going to offset and adjust some income only. And on income so there is some tax, na? And if your income is adjusted because of loss, so government is affected. That's why government is also behind loss. And you know, for loss making people, what loss is? If you have suffered loss in the business, feel your duty to inform us. How will we come to know that you had a loss? You know that you suffered the loss. You don't pay the tax. But how will we come to know? Now people will say, why do you want to know? We want to know. Because unless you tell us that you made a loss, how can we give you the set off? When the time of set off comes, you come directly to us. Set off, set off, set off. But then, we also should know na, that you made the loss. And knowing ke baad, we want to check also. After you inform us your loss, we want to check your loss also. Because we cannot blindly trust your loss and give you the set off. In short, understand the sentiments of income tax department. What they say, if you have suffered loss, don't keep it to you. Inform us. We also want to know. And how will you inform? You are not going to call us. You are not going to WhatsApp us. You have to inform by filling ITR. So fill that form and inform us. Because we also will check what loss you suffered. Because only when we check, we can give you the set off. So see, one thing is fixed. That for loss suffering people, filing return is must. It is our duty to inform our loss to government. Otherwise, we cannot expect a set off. But you know, the most important point is what? Listen. Filing return is must. But that return, you have to file it on time. You cannot delay loss return even by a single day. Filing loss return should be in time. Time means what? What is the due date? Now look at the drawing. See, our due date is 31st of July, 31st October, 30th of November for some people. So on or before the due date, look at this highlight. In this period only you have to file the return. What is this R? R for return. And that should be on time. And if the return is late, see what I have done. It's not allowed. Filing return late is not allowed. That means if you file loss return late, you know what will happen? You cannot carry forward the losses. Usually I am allowed to carry forward the loss for 8 years. But since your return was late, you have to just throw your loss in the gutter. You cannot carry forward. Why? Means why law is so strict that you have to file the return on time only. Even if 1 day delay, you cannot carry forward the losses. See, we understood the logic of filing return is must. Because unless we file the return, how will government come to know that I suffered the loss? And they need to know. They want to check also, because they are only going to give us a set off. So logic of filing the return we understand. But now next logic is, why on time only? Why not late? Because we have heard that people file belated return. We have heard or not? Not heard. Now here now. Usually a person can file a return late. But you know that late filing return is allowed for people having profits. Today if I am having profits, so I can file my return late also. But that is for profit people. People who suffer loss, they are not allowed to file the return late. If they file late, they cannot carry forward the losses. Why? Means why law is so particular that return should be timely, late not allowed. What will happen if I file late? See, law will not allow carry forward. But why it is affecting government? Even if I file the return late, I am informing my loss to you now. You expect from us what? That whatever loss we suffer, we should inform you. I inform na. Even if I inform late, I am informing. I am talking to government and I am asking them what problem you have that you want that late is not allowed. It should be on time only. To see the answer for this is what what income tax department says. See, if you inform your losses by filing a return at a later date, later means, for example, screen per dekho, look at this. If you file the return on a later date, do you know what problem income tax people have to face? You file the return only late, so their checking will start late. After you file the loss return, they want to check whether the loss is genuine or not. Checking is must or not, because that loss is going to be adjusted in next year's income. So imagine a person files return on this date. Look at this. If a person files return on this date, means at a later date, so government's checking will start late. So what difference it makes? Government cannot delay much na, because government wants to check the loss at an early stage so that before the next year comes, government wants that loss should have been checked, because this year's loss is adjusted in next year, and government is worried about what if you inform your losses at a later date, so when will we check, and by the time we'll check 2-3 years will come away and go, and we don't want that years should pass by. We want that before the next year comes, before the return of next year comes, we should have checked the loss of last year. Understand the feeling of government. They want early return. Why? Because if the return is late, their checking will start late and it cannot be delayed na. Because if it is delayed, what happens? It is delayed, so delay, so much delay that this year's return to gone, even next year's return gone, next year's return also gone. So we cannot let go next year's return like this na. Before the time for next year's return come, government wants that we should have checked in advance the loss of preceding year. That's why government is worried. See, problem is what the loss gets adjusted na. See, had it been a profit, in profit there is nothing like that. Now in profit what we do? We pay tax. But is it like this that profit of this year has to be added in next year or to be adjusted in next year? This year's profit has got no connection with next year's profit. That's why law is not bothered about profit people. Understand the logic first, otherwise it is not possible to move ahead. See, if I am having profit, why government is not bothered about my return is time or late? Because profit return we have to pay tax. So even if I file the return late, I have to pay tax. I will pay tax with interest. but my this year's profit has got no connection with next year. So since my this year's profit is independent, so government doesn't mind even if I file the return late. But yes, there is a limit for late also, that I will come to the point in the next section. But government doesn't mind the return is late because it is profit na, and profit of 1 year has got no connection with next year. But losses of this year has got connection with next year, or next year will come soon. So next year will come soon means before the next year comes, government wants loss should be checked. Now many students ask, sir, does government actually check our loss? That's not your lookout. What loss is? Whether we check your losses or not, whether we blindly allow your loss to be set off, that's not your lookout, that's our lookout. Many times we don't check someone's losses because there are so many people filing return in India, and checking each and every one is practically not possible. So that's not your lookout, that whether we are going to check or not. In case we want to check, then in case we want to check your loss, then to file the return on time na, because if you file late, when will you do checking? And if our checking is delayed, it cannot be so much delayed that next year also comes. So the logic is what you know. Since loss of this year has got connection with next year, law wants that before the next year comes, before the return of next year comes, we want that loss should have been checked. But that is possible if you file the return at an early stage. Na? This is the reason. Conclusion: if anyone wishes to carry for the losses, just guide him that please file the return on time. Even if the return is filed 1 day late, you will not be able to carry for the loss. You will say, no, I have got so much loss. Throw away your losses. Scrap your losses. You cannot do anything if your return is late. Exception. Exception now. There are two exceptions to this rule. Exception means there are two cases where even if return is filed late, government allows it. You know what are the two cases? House property loss, unabsorbed depreciation. In case of these two losses, even if the return is filed late, it's allowed. Why? We need to understand the reason of every rule. See, right now, firstly, did you listen what are the exceptions? House property loss and unabsorbed depreciation. These two losses, if you wish to carry forward, even if your return is late, government doesn't mind. They will allow you to carry forward. So see, to understand the reason, you have to understand my previous reason. Sometimes back, why did I say, means what did I say, that why government expects you to file the return on time? Because they want to check as early as possible before the next year comes. Checking was the issue, na? But then house property loss doesn't require much of checking. You know, under the head house property, why losses come usually? In CA Inter you have studied, there is something called self-occupied property for your residence. In self-occupied property, the income is zero. But still you get deduction for interest on housing loan. Do you remember that? So in spite of my self-occupied property having zero income, still I am getting deduction of interest on housing loan. So that deduction creates a loss. So that is the usual case of house property loss. So tell me, if such is the house property loss, does it take time to check? It doesn't take much time, na? It can be checked in a minute, in a moment, in a day. Because income tax people, they just have to check what? That interest on housing loan is genuine or not. And for that, so people have to submit interest certificate. So when you submit interest certificate, when you submit so many things, so hardly it takes a day for income tax department to check that yes, interest on housing loan is genuine, and because of that the loss is there. So that checking doesn't take much time. That's why law is liberal. That if you are suffering loss under the head, house property, don't worry. Even if you file the return late, we are okay. It's okay now. You file the return late. Our checking will start late. But it's okay. We don't require much time to check house property loss. But business loss, it is so complicated. In a big business, there are so many transactions. So checking a business loss or capital loss, it is not easy. That's why in those losses, government expects us to file on time. What was the other exception? I gave two exceptions. House property loss and unobserved depreciation. Now see, unobserved depreciation is what you know. If I got very less profit, profit means I have not yet deducted depreciation. Imagine my profit is only 100 and I have not yet deducted depreciation. So 100, remember the figure, profit is 100 and now my depreciation is 500. On the fixed assets used in my business, depreciation is 500. Now feel, profit is only 100 and my depreciation is 500. So my profit is insufficient. It will absorb only 100 depreciation. Profit itself is 100. So it can absorb means at the most it can absorb depreciation 100. But my depreciation is 500 na? And my profit could absorb only 100. So what is the balance? 400 is the depreciation which my profit could not absorb. Why it could not absorb? Because I didn't have profit only to absorb. To absorb depreciation, you need profit. I had profit but only 100 na. But my depreciation on the other hand was 500. So to the extent of 100, depreciation was absorbed, but balance 400 is unabsorbed. Now, unabsorbed depreciation is basically depreciation. This checking also doesn't take much time. If someone is having unabsorbed depreciation, so basically he is carrying forward unabsorbed depreciation. So this thing doesn't require much time to check. Because to check unabsorbed depreciation, you know what income tax department has to check? There is one format of depreciation working which you have studied at CA interlevel. You know that format is opening WDV of the block of assets, add purchases, less sales. This kind of format we make and then we calculate depreciation at the fixed percentages given by income tax. Little bit you remember? Don't worry, all this we are going to study in detail in the topic income from business. But what I mean to say right now is, if someone is having unabsorbed depreciation, what income tax department has to check? They simply have to check the depreciation working. And depreciation working, to check that working, it doesn't take so much time. That's why law says, okay, it's depreciation only, na? Means we just have to check one thing, depreciation. That we can check nicely, easily within less time. So even if your return is late, we will allow you. My logic remains same, whether it is house property loss or unobserved depreciation. It takes less time to check. Government can check such losses very fast. That's why government is allowing people having such losses to file the return late. But other than house property loss and unobserved depreciation, if you have some other loss, then Baba, we need to check in detail and that checking takes time. And for that detailed checking, please file the return on time. Come on. To see this exception, look at this. See what I have written. Exception. House property loss and unobserved depreciation. What I have written against that? Late and tick mark means allowed. Late filing is allowed. But filing is must. Without filing the return, you cannot dream of set-offs and carry forward. Filing is must. We were discussing about whether late filing is allowed or not. So tell me, late filing is allowed or not? For these two losses it is allowed. But for other losses, filing return late is not allowed. Look at this. I have written here, not allowed. Okay, now try this example. You will discover one good thing is in this example. Try this. Imagine an assessee had income from salary of 0. Check the example. Income from house property 20 lakhs. Income from business negative 5 lakhs means there is a loss in the business. No capital gains, no income from other sources. Now, this loss I am able to set off against income from house property. By the way, business loss you can set off anywhere except income from salary. These things also we'll talk at a later stage. But right now just remember, business loss you can set off anywhere except income from salary. So here too I don't have income from salary. Na? I am going to set off against income from house property, and that set off is allowed. Okay. Now imagine this person had filed the return late. Return was late. So can he set off the loss of business against house property income? Means, is this setting off permitted given the fact that his return was late? Very late. Return was late. So you know there have been some cases like this in real life. Cases means court cases. Income tax, there are cases na, when you are not satisfied with income tax department, you can file a case. Sometimes your case goes to High Court, Supreme Court. So there have been some cases like this where a person has filed the return late, and income tax people, you know what they did? They didn't allow the set off, saying what? Your return is late, sorry, you won't get set off nahi milega. So tell me, is it right? Wrong. See, there is no restriction on setting off in the same year. Carry forward is not allowed. You didn't see the stress on carry forward. See, if your return is late, carry forward is not allowed. But if you want to set off in the same year, there is no restriction. Because see, loss of this year, I am adjusting against income of this year only. So when adjustment is done in this year only, this is not connected one with next year. Then why government will even expect me to file the return on time? See, what was the logic behind that government ka sentiment? Ki we want timely return. Because government feels that before the next year comes, we want to check in advance. Because next year's profit will get adjusted. But when I am adjusting in the same year, so I am anyways not disturbing the next year. So why should government be bothered कि whether my return is timely or late? That's what I am saying. Na? See, people think that if the return is late, bhul jao, loss, forget the loss. Why forget the loss? You can nicely set off in the same year. But when you want to carry forward, then there is a restriction that if your return is late, carry forward is not allowed. But if you are willing to set off in the same year, why should there be restriction? And think logically also, na? If you are trying to understand the logic which I am saying, you will also get convinced that it's okay, yaar. Even if the return is late, this guy is not disturbing the next year. His loss is getting adjusted in the same year. So even if his return is late, it's allowed. Such questions have come in exam. You know, this thing which I have drawn on the screen, similar thing they will frame in the form of big paragraph. They will create a dangerous situation. Ultimately, they will test on this point only. Means if you see CA final paper, small things which I explain with a small example or drawing, same thing they compose in the form of a big paragraph. And looking at that big paragraph, you get lost. But actually, this kind of question has come many times. And basically, you know what they will ask in such question? the assessing officer is not allowing the set off because the return was late, and assessee claims that he should be given the set off. Who is right? The question is like this. Who is right? They don't ask like this. Is the contention of assessee valid? Contention of assessee means assessee's claim. He says that I should be given set off. So what, my return is late? I am adjusting the same year. I should be given the set off. So is the contention, the contention means is the assessee's claim valid? So what you will write? Yes, assessee is right and the assessing officer is wrong, because law says if you want to carry forward, return should be on time, na? And this assessee is not carrying forward, he is setting it off in the same year. Then even if the return is late, it's allowed. So this becomes an important point. Conclusion: if return is filed late, carry forward is not allowed. But if your loss is getting adjusted in the same year, then it is allowed. Tell me, what if in my example, see I am making a change. This house property income was only 2 lakhs. Imagine house property income was only 2 lakhs. Now what will happen? And the return is filed late. Then I have income of 2 lakhs. Na? So to the extent of 2 lakhs income, I can set off the loss. But my loss is 5 lakhs. 2 lakhs is adjusted. What about balance? Balance 3 lakhs you want to carry forward. But you cannot if your return is late. Means to the extent it gets adjusted in the same year, it's allowed. But if you rely on carry forward and if your return is late, then carry forward is not allowed. Okay, then one more thing. Look, sometimes due to some very genuine reason your return was late. I am talking about the same rule. Right now, what did I say? Late return is not allowed. Late return is not allowed. Return should be filed on time, on time, on time. Late not allowed. Even if single day late, not allowed. So here there is one point. Sometimes you have filed a return late due to some very genuine reason. Maybe there was some death at assessee's residence. In his family there was some death. Or maybe the assessee himself was hospitalized. There was some very genuine reason that assessee could not file the return on time. So for this there is a provision. For this there is a provision that if assessee could not file the return on time due to some genuine reason, then we will allow you. We will allow you to carry forward your loss provided your reason is genuine. But for that you have to make an application. Application to whom, you know? See, if your loss is up to 10 lakhs, you have to file an application to CIT. What is CIT? Commissioner of Income Tax. He is an employee in Income Tax Department. Commissioner of Income Tax. So if your loss is up to 10 lakhs and you could not file the return on time due to some genuine reason, so that genuine reason you have to convey by way of application to CIT. And CIT will check if he is also convinced, oh no, you had a genuine reason, you had a death in your family, you are hospitalized, etc., etc. If he is convinced with my genuine reason, then he will condone the delay. What did I say? He will condone the delay. What do you mean by condone the delay? Let go. He will allow. He will say, it's okay, Baba. Your return is late na. It's okay. He will excuse you. To excuse, to let go is called what? Condone. So that's why when we make application to CIT, we say I am filing a condonation letter. What do you call? I am filing a condonation letter where I am requesting for a condonation. Requesting for condonation means what? I am requesting them to let go. It's okay, my return is late, but I had some genuine problem, na? So when they let go us, it's called condonation. But you will have to apply to CIT, na? But that is for losses up to 10 lakhs. But for losses more than 10 lakhs, up to 50 lakhs, you have to apply to CCIT, Chief Commissioner of Income Tax. Earlier it was just Commissioner of Income Tax. Now it is Chief Commissioner of Income Tax. But for losses more than 10 lakhs. You know why did I stress on more? Exact 10 lakhs also CIT. If it is more, it is greater than 10 lakhs up to 50 lakhs. Up to means even exact 50 lakhs. Then you will write application to CCIT. And if your loss is greater than 50 lakhs, CBDT. CBDT, Central Board of Direct Taxes. See, I have written all this over here. Look. For losses up to 10 lakhs, application to CIT. For losses greater than 10 lakhs up to 50 lakhs, CCIT. For losses greater than 50 lakhs, CBDT. These people have the authority to condone your delay. Say like this. What to say? These people have the authority to condone. Condone what? The delay. The late filing can be condoned by these people. But then you have to remember the amounts also. Tell me without looking. Losses up to 10 lakhs, CIT. About 10 lakhs up to 50 lakhs, CCIT, Chief Commissioner of Income Tax. And above 50 lakhs, CBDT, Central Board of Direct Taxes. But you know one thing? Don't depend upon condonation. Although the law has made provision, that is, someone has very genuine reason and he could not file the return because of that valid and genuine reason, he will be allowed to carry forward. Although the provisions are dead, but you know, don't expect much on this, because usually these people do not condone. They are very strict because they are always of the impression that assessee is lying. He is a liar. There is no genuine, they don't get easily melted with your valid reason. Yes, obviously if someone's family had some death, etc., so it can be easily proved. So for some straightforward reason like this, where any normal human being will get melted, then it is okay. But sometimes, you know, apart from this death, hospitalized, you provide some other valid reasons and they don't get convinced. They say, no, this is not a valid reason, this is not a valid reason, and they are so stubborn that they don't condone it. They are so stubborn that they don't condone the delay. Means what I am trying to say based on my experience, that it is not that easy to get the condonation, but we can give it a try. And you know why I am talking about all this? Because in your articleship also, in case your client's return was filed late because of your mistake only, so don't be under the impression it's okay, na, I filed a return, I'll file a condonation letter giving some genuine reason, but don't bank on that. That remedy usually doesn't help. In rare cases only they will condone. But whatever, for academic exam purpose, you can say write in paper, yes, we will get condonation if we have valid reason. Because in exam you just have to say valid reason. Huh? But in real life, that reason is valid or not, genuine or not, it's a debate. But anyways, that's practical life. Forget practical life. In exam, if they say assessee had a genuine reason for filing the return late, then what you should say? Such delay can be condoned by CIT, CCIT, CBDT, depending upon the quantum of loss. So this was section 139.3. So 139.3, what we studied? First I explained what? The basic rule that for, in 139.3 what I taught. So firstly the basic rule, if someone has suffered the loss, firstly inform your loss by filing a return, and secondly file the return on time, strictly on time, even 1 day delay not allowed. And then I gave exception that in case of house property loss and unobserved depreciation, even if the return file is filed late, it's allowed. And I gave the logic also, because these losses can be checked fast. So even if someone has filed a return late, government doesn't mind, they allow it. And then I explained what? This example, what did I explain? If your return is late, carry forward is not allowed, but setting off in the same year is allowed. And then next theory was about condonation or delay in case you had a valid and genuine reason for filing the return late. So coming back to the beginning of the topic, look at this. See here. Chapter is in 4 parts. Returns. What is the name of the chapter, by the way? Assessment procedures. Okay. Today when you talk to your parents, they will ask you, what did sir teach you? So what will you say? Assessment procedures. Okay. Remember the name. Assessment procedures. Then in that part 1 returns, inquiry, assessment, other section. And what we have started is returns. In this we did 4 sections. 139(1), 139(4)A, 139(4)B, 139(3). See, in between sometimes you will miss some subsections. Like many times students ask, where is 139(2)? So see, in the sequence of my sections, sometimes when you feel some section is missing, you know, many times what happens, some sections are abolished from the act. They are removed from the act. And once a section is removed from the act, there is no point in studying that section. Na? So sometimes a section is removed only, and sometimes that section is not important. That's why I might not be discussing. So in case you feel some sections missing in the sequence, don't worry. Simply study what I am teaching, okay? So what did I teach? 139(1), and directly after that 139(4)A, 4B and 139(3). And what was 139(1)? Voluntary return. And this again was in 3 parts. Who should file, when to file, how to file. Who should file summary is this. When to file means due dates. How to file, form, you have to fill the form. And then charitable trust and political party, these 2 sections we have done parallelly. In both these sections the message is common, that you people take entire income exempt, you take. But before taking the exemption, before claiming the exemption, if your income is above basic exemption, then you people have to file the return. And in you people, who is the actual person responsible? In case of trust, receiver of the income. In case of political party, chief executive officer of the political party. And after this we did return of loss. So for today this much is enough. To be continued in the next lecture. Revise and come, please revise and come. Underline please. Please come on time. And don't ignore the word please. Next lecture I will first have take up session. I will ask you some questions and then I will move on.